So in this chapter, it's about 15 questions.
Okay.
All right. This is a specific regulation which agents should be aware of. When it comes to Florida life insurance solicitation law, so you have to know which this will apply to what. Is applied to only insurance companies. I mean not insurance company, I mean like term policies, whole life policies, but it does not apply to group policies. Okay, we're going to learn that in a minute. So that's information procedures require when proposing life insurance to a prospective buyer. Now, the second rule we're going to learn about is replacement rule. That's a requirement and procedures to be followed when you try to make somebody to replacing an existing policy to a new policy. And the other rule that you need to know about is the Code of Ethics in Florida Association of Insurance and Financial Advisor. This one that's done that establish outline. When you see the word appropriate, is mean ethics, inappropriate. Or if they don't put that, they can put behavior. Because behavior also mean ethics. How that person behave towards something. Okay.
Mhm.
Okay. All right. So, oh, it mentioned it right here. I didn't know that. It's behavior, business behaviors, for agents, and also establishes activity for agent to the public trust. So let's talk about it about disclosure. So before you sell somebody something, you had to give them a disclosure. Disclose. What is a disclosure? Provide the buyers with information that the buyer will select the most appropriate policy. So you give them explanation, you give them something where they can say, okay, so they can understand features of the policy. They can also evaluate the costs. They're not gonna know exactly how much it is, but when you give them that, you just make sure they understand the features this policy carries, and also to evaluate the cost of this comparable policy. So if the person wanna get a term versus a whole life, or a whole life, they might say maybe a single whole life or a universal whole life. It depends. So you give them the comparison. Which one? And it must be given to the applicant no later than the time of the application is signed. So that's called a buyer's guide. We're gonna get to that. Okay. So that's where you come in. Those are the two disclosure that they need to get. One is the buyer's guide. So you cannot give them the buyer's guide after they sign, unless if your policy have at least 10 days for look. So the buyer's guide is before you buy. That's telling about generic information about an insurance policy. This is pretty much what this explains really. Now, the policy summary is written statement described that's after you buy. That's include features, key features of the policy. Now, this one being specific, okay? So it must be a separate document, cannot combine with sales illustration. So when you're doing the presentation for the person, so it have to be, this is when they prepare the document and send it to you. Same thing. Do you see how when you apply for a car insurance, when you apply for that car insurance and they send, after they send you the, first they explain everything to you. Then you decided you're buying a full coverage. Now they tell you exactly how much it's gonna cost you. They tell you how much is gonna be the liability, or if you don't have any liability, if you're gonna have rental, reimbursement, towing in there. They tell you exactly, and they tell you how much is it, and they send you a summary on all that coverage. That's what the summary is. You got it?
Yes.
So the summary is anything that's specific. If you know exactly the premium amount, that's a specific thing. So is if you know the surrender, if you surrender this policy out, if I don't want this policy, they tell you exactly how much you're gonna have in the cash value. And that's been specific information. So those are the two disclosure that you need to give. You got it?
Yes.
Just so you know, when did you get the summary? When you deliver the policy. Okay.
Yes.
Okay, at delivery. Now, when do you get the buyer's guide? Before you buy? before you
Correct.
collect the initial premium. Before they sign the application, they have to understand what they're doing. Now, what happens if I don't have any more buyer's guide? As long as the policy have a 10 days free look, you can give it to them when they deliver the policy. Now, don't confuse this with the 14 days free look. 14 days, 14 days. That's what Florida require. But as long as you have a 10-day free look at least, if I don't have no buyer's guide, I can go ahead and do the policy. And when I deliver it to you, I give you the buyer's guide, and you still have 14 days to look at it. So we're good.
Okay.
Don't confuse that, because sometimes people confuse the at least 10 days. Does that mean I have to take 10 on the exam? No, that's at least 10 days not to give them the buyer's guide. That's what that means. But the Florida says 14 days. So 14 days is bigger. It's more than 10. Okay? It's more than 10. All right, advertising. When you come to advertising, agent or producer, you don't do advertising. And those advertising must be accurate and they cannot have any misrepresentation. The insurance company responsible for all the advertising. Okay? Very important in advertising. Insurer is responsible for its advertising. Because regardless who create them, regardless who distribute them, whatever the name of the company in that advertising, you are responsible. So if somebody doing a bad advertising on you, you better make sure you go after them. Other than that, the state gonna go after you. Because the state don't care who create them, they don't care who distribute them, they don't care who design them. None of that matters. So you, the company, I'm gonna go after you. So don't let them do advertising on your behalf. That's all they're saying. Got it?
Yes.
Now, this one you need to understand. The life insurance solicitation rule. An attempt to persuade the person to buy a life insurance policy. They're orally written. So life insurance solicitation regulation does not apply. Now, you see, this is very important. You need to know this rule does not apply to those things. Everything else, it will apply to it, okay? It does not apply to an annuity because, of course, this is a rule for insurance. An annuity is not insurance.
No, it's an asset.
Okay, and like a retirement, correct. Credit life. It does not apply to credit life. Credit life is when you go buy you go to a place, you're buying a car or a home, and they make you buy life insurance with that. The rule does not apply to credit life insurance. It does not apply to what? Group life insurance. Okay, make sure you get that. No group, the solicitation rule does not apply to it. It does not apply to what? The variable. So you know that, because variable, you need 2 licenses. There's part of his investment. Because of technicality, there's other rule that apply to those type of policy, but not the life insurance solicitation rule. Life insurance issue in connection with pension or welfare plan, so it does not apply. It does not apply to industrial policy. So that's meaning it apply to term. It's applied to whole life. It's applied to universal life, variable life. I mean, not variable life. Universal life, term life, whole life, straight life, limited pay whole life. But it does not apply to the one that have the variable. Because the variable have investment attached to it, so it does not apply to it. Just so you know that. You got it?
Yes.
Now, prohibited marketing practice. Things you cannot do. Using misleading like words. You cannot say that, oh, I am a financial planner, or I am an investment advisor. If you don't have those credentials, you can't say that. Or I'm a financial consultant, or using similar term to engage into the insurance business. You can't use this term. You can say I'm an insurance agent, that's fine. Okay, so there's term you can't use, that's misleading. False information advertising. Insurer may not make or publish or circulate. They use that, circulate before the public any advertisement that's not true. That is untrue, deceptive, misleading. Gift for advertising. The insurer cannot give no more than $25 in gift. But I thought they say it was $100. Hi, Gama. I thought it was $100. But if you don't see, if you see, I thought it was $100. This is probably a little bit old. Maybe I think it's $100 for advertising gift. Cannot exceed that. Free insurance. Offering free life insurance is either a sale or a purchase personal property. That's prohibited. There's no such thing. There's no free insurance. So stop lying to the people. Yeah. Yeah, because I don't think suitability factors. Now, when you come to suitability, you have to know that's somebody who's buying like to ensure like if they're buying an annuity, they have to make sure their age is part of their suitability. Income, the annual income, financial status, what is their objectives, okay? What their liquidity needs, how long they would need the money, what is they intended to use the annuity for, what is their experience when it comes to investing in annuity, what is their risk tolerance, can they hold? So all those things that are important for suitability factors. Now you see the beneficiary age is not in there. So beneficiary that's not in there, not involved. We don't care about that. But those things here are important. That's for annuity. Not for life insurance, that's for an annuity. Okay, so when we talk about the senior consumers, somebody who's 64 and older or 65 and older. So if you sell an annuity to a senior, the annuity sold to the senior consumer may not contain surrender deferred surcharge or withdraw for more than 10%. So if you see there's telling you a question about where you have a senior consumer buying an annuity, what the percentage is 10%, and you must maintain record for at least 5 years, you know that already.
Yes.
Just remember the 10% only for seniors when it comes to annuity. Remember that.
Okay.
The next part about replacing insurance. If you're replacing something, I must have something already. So you want to make sure you're not violating the replacement rule because it's highly regulated. Because so many times people just replace people policy because for the fun of it, because they want to make money, or because they don't work for this company anymore, they don't like this company anymore, they just replace people policy, even though it's not good for them. So the state says, we're gonna set up requirements. You don't just go and replacing people policy. You have to make sure the proposal you're giving them is in the best interest. What is the definition of replacement? This is some type of replacement. So any of this consider replacement. A policy that lapses. If the policy is lapsed, you give them a new one. While you could do a reinstatement, or you surrender, you could do a reinstatement, but you give them a new policy instead of do that. You give them a new policy. That's not fair. So make sure if the new policy, unless if the new policy is better. If the old policy they have that, even though it's lapsed, if it's not more than 3 years, then it will be better you do a reinstatement for that. You get that?
Yes.
Also, if you convert, this is another one that's important. If you do this, because remember they use the cash value now to do a reduce paid up.
Right.
Or they use the cash value to do an extended term. That's the replacement. The replacement will apply. Okay? If you reissue with the reduction of cash value, that's replacement.
Correct.
Convert it so that either the amount of coverage period is reduced, or you use to use that money to finance another product or another policy.
That's a replacement.
Now you need to do replacement do not apply to group policy. Replacement do not apply to group. So if the employer decided they want to change the group to another company, replacement does not apply. Okay.
So group policies cannot be replaced. They can only purchase a new one or convert it.
No, that's when they can replace it. They don't care, but it's not, the rule doesn't apply. So I can have, let's say, for example, I have this group policy with ABC company and they're going to XYZ company. That's fine. The rule does not apply to that. That's not considered replacement. And if I have somebody that have a policy at the job and I'm coming to do it to them, to us, to give them a new policy, that's not replacement. The rule does not apply for that one.
Okay.
But if they have an individual policy to a company and I'm replacing it to another policy, now they will can apply. I have to make sure it's in the best interest. You got it?
Yes.
So replacing insurer, the company issued the new policy. That's the replacing insurer. The existing insurer is the company whose policy is being replaced. Okay.
Okay.
Now you also need to know. You also need to know the duty of the agent. Duty of agents. As an agent, you have to give them, very important to give them notice regarding replacement. And also you have to obtain all policies that have been replaced or annuity. All, not some,
All of them.
all of them. Now, this is all the life insurance, not health insurance, because this is dealing with life insurance, not health insurance. All the life insurance that's need to be replaced. You can leave a copy of the sale proposal material to the applicant and you submit the notice, blase, blase. So that's that. Very important. Very important.
Notice.
Okay.
Okay.
And very important. Oh, la la, come on. Very important.
Okay.
Very important. You got it?
Yes.
Good. Duty of replacing insurers. So now those are the company now. So when they're doing replacement now, notify immediately. When they should notify them?
Immediately.
Yep. Now, if the request by an applicant send comparative information, so if the applicant asks for a comparative information form, you have to let them know in 5 days. So you cannot hold that information they request. If they request it,
Okay.
5 days after receiving the application. Good?
Yes.
Excellent. All right. Now, this is what I was saying about the free look. It's right here. You see, the providing a buyer's guide or a policy summary prior accepting the applicant initial premium unless there is a free look for how long?
10 days.
So in Florida is how long?
14 days.
So we're good. Okay. That's the way they say I can skip giving you a buyer's guide because my policy have a 14 days free look anyway. Because the minimum is 10. So I got 14. So I give you 4 extra days anyway. So you have to give me statements for at least how long?
3 years.
3 years. Remember, it's not a senior, 2 years. The summer again, 10 days. Keep working for 2 years. We're good in that. We don't have to worry about that. Okay. This is what I was trying to explain to you earlier. We were ahead. Replacement does not apply to industrial policy. Same thing. The solicitation rule does not apply to them. The replacement rule does not apply to them either. So beside those 4 things, if they don't put those in your exam, everything else, the replacement will apply.
Okay, so
Now,
okay.
if somebody have a term policy, they're gonna change it to a whole life. Replacement does not apply. That's not replacement. If they do it,
Conversion. That's conversion.
Uh,
That's conversion, right?
yeah, that's could happen. It could be conversion. Oh my God. Okay. So replacement does not apply on that. Okay. So let's say if you're doing, what about if you do a whole life? If you take a whole life and you're gonna give the person a term. So if you give them a term policy, replacement apply.
Okay.
But if you're doing a term to a term, replacement does not apply. But if you're in the whole life to a term, replacement apply. Make sure you get that.
Left to turn replacement. Okay.
I can erase it.
Yes.
Okay. A contractual change is made to the existing policy, the same insurer, or existing policy is non-convertible term with 5 years or less, and the term cannot be renewed. Whatever. Let me see what else. Every policy issue in Florida, name of the party must be in the contract. They must be subject to the insurance, the risk of the insured against, okay, is it against death, effective date, and the coverage, the premium amount, the condition pertaining to the insurance, form, numbers, and edition date, and all endorsement attached to the policy. So all of them should have that into it. The free look, 14 days to get what?
To get the buyer's guide.
No, 14 days to get full refund.
Oh, sorry. Yeah.
So 14 days to get the full refund. If I'm doing this policy, I can get a full refund. The grace period is how long?
30 days.
30
or
days.
31 days per group.
31 days for group. And if you die during the grace period, they can charge you a maximum of how much?
8%.
8%. And if you die during that, they can charge that you have to pay. They're gonna take all that out. Okay. If the insured died during the grace period, the death benefit is paid out minus any premium due, plus if they charge you any interest. So you don't get all the money, you get a reduced death benefits, unless if it is a group, you get the full death benefits. Okay. 31 days to get the full death benefits, group. 30 days for individual policy, and they can charge you interest of 8%. Okay. Secondary addresses that can save you is to protect who?
To protect the insurer or the elderly insured.
Okay. The coverage. Now, when they say about secondary addressee, 64N, have to be 64 and older.
Okay, 64.
64 and older. Let me see. Let me just see if I can get this guy to another one.
Okay.
Okay, he went to another one. All right. All right, so 64 and older. And the parts must be at least enforced for at least a year. Now, you see, now, know this one. The grace period, you know, is 30 days, right?
Correct.
But because they're old, they give them an extra 21 days. So therefore, they have a total of 51 days grace period.
They could forget stuff.
So they have an additional grace period, because they're old.
Right.
Since you are an old person, unfortunately, we're gonna have pity on you. Okay. See how they make this thing confusing? You see how this one is 64 and older?
Mm-hmm.
But when they were
Yeah.
talking about this annuity earlier, they give us 65. Why they could not live it the same 64? All of course. Come on.
Right.
Okay. Policy loan. Florida law specified the insurer may charge no more than 10% in policy loan. Wow. Okay.
I mean, that's good.
Yep. Non-forfeiture option. When something is paid up, non-forfeiture option, it become effective. So you have to make sure the company gives you 6 days to select another one if you didn't pick one. There's 3 of them.
Mm-hmm.
Cash, extended term with this paid up. If you don't decide, 6 days I can say, you know what? You have the right to pick one. If not, I'm gonna give you one. So the might I'm gonna give you the extended term. If the policy surrender within 60 days, the premium is due date. The premium have been paid for at least 3 years on an ordinary insurance and 5 years in an industrial policy. The insurer will pay the cash surrender value. Why is this important? I don't know. If the policy is paid up and the non-forfeiture benefit, the insurer will pay the cash surrender amount 30 days after the policy anniversary's date. And they can, if you request the money, they can defer it for 6 months. All right, that's enough for that. Right here, it's important. Why they come out with this clause is to protect beneficiary against who? Creditors. So make sure you know that. Make sure you know that. It's
I got that one
protect
confused.
beneficiary against creditor claim
Mm-hmm.
or the policy owners creditors. So they protect the proceeds is being held. The company hold the money. They pay it into a fixed amount or fixed installment option until there is no more money. So they don't see the person, the beneficiary have a lot of money, so they don't go after it. So they do not pay it as a lump sum.
Okay.
Because if they paid all of it, it might be subject to creditors. So therefore, you put that to protect the beneficiary.
Wait, so in a paid out option or settlement option, the automatic option, if you don't pick one, would be a lump sum, right?
What? I'm sorry, repeat that.
For settlement options, if the beneficiary does not pick one,
Is a lump
what's the
sum.
automatic?
Correct.
Oh,
Is a lump sum. Correct.
okay.
Correct. But if the beneficiary, if the policy owner already put that clause on it, unfortunately, you cannot get the lump sum anymore. You can't change it from that because they already picked that, so they're not gonna give you all the money. So it's because if it is a lump sum, that's not, you have no protection because they give you all the money.
Right.
Beneficiary, if a former spouse, okay, sometimes they confuse you. A former spouse can still be a beneficiary into if the policy owner choose to. But if they divorce, it can be voided or it can become invalid by a court order if the designation was made prior to the divorce. But if after we divorce and then I still put her as my beneficiary,
Mm-hmm.
that's fine. I can put whoever I want. So life agent you cannot be beneficiaries unless the agent is replacing coverage and the family members control business. That's the only way, that's an exception. So if it is for my mom, I can be the beneficiary. I can be the agent and also be the policy owner, I can be all of it. I can be the policy owner. I can be the beneficiary. Because that's for
Okay.
my mom. I'm
Controlled family business.
I'm sorry.
That would be only for controlled family business,
Correct.
right?
That's for control. But if it is not your family, you can't be the beneficiary on it.
And controlled business cannot exceed 50%.
Cannot exceed
12
50%.
months.
Correct.
Okay.
All right, the competent party. You have to be in legal age. Okay, that's important. You have to be legal age, mentally competent to understand the contract, and you cannot under the influence of alcohol or drugs.
Correct.
But you don't need a secondary, you don't need a high school diploma or any college degree to be competent. And somebody can be disabled, but they're competent. Disabled, that doesn't mean they're not competent, okay?
Right.
Because somebody can lose an eye and they're good. Somebody can lose an arm, they're good. They lose a leg, they're good. The minimum age in Florida is 15 to buy policy. To get into a life insurance contract or an annuity contract. Minimum 15.
15.
Whew. I'm going to give you a good thing here. If they ask you, what is the minimum to consider a group? What is the minimum of people to consider a group? The answer is no minimum. Or the answer can be one. One person consider a group in Florida. I know it's hard for you to comprehend, but take it for what it is. Okay. So no minimum or the answer is one. But if they say how many people need to be into a debt group to consider a group? 100. If they're not talking about the specific group, one person consider a group in Florida for policies to get a group coverage. So okay. So this could be an answer. No minimum.
Okay.
Or they can just put one person. If they say put one or more, that's correct. I know some people are going to say two or more. Not correct. One or more, it's correct. Or they might say 5, or they might say 10. No, I don't care about none of those. As long as I say one or more, I'm good. If you say one or more, perfect. Or if you say no minimum, I got it. Whew. I hope that's help. Hope that's help. Hope that's help. All right, characteristic of what? Group life insurance. It's annual renewable term insurance. So if they say which type of policy using annual renewable term insurance, is group and also universal life use that. Who get the master policy? The policy holder.
Policy holder.
And the members get a certificate of insurance.
Correct.
And they cannot discriminate. And also, evidence of insurability is not required as long as they are enrolled during the enrollment period. Okay. They cannot exceed, coverage cannot exceed 50,000. More than 50,000 is taxable. Okay. So if somebody get the $75,000 into a job in a group plan, the first 50 is not taxable. The other 25,000 is taxable to the beneficiary. And the group must be exist for other purpose than buying life insurance. You cannot say, I'm going to do a group just to buy life insurance. It must exist more than a year. Individual members to the group have the right to convert their policy without evidence of insurability, but they can do that in 31 days. You got it?
Yes.
So, Florida law requires that group insurance plan must provide coverage for more than one person under the policy. Woohoo! That's what that means. More than one person. Yeah, I'm on the class. I'll call you in a minute if you're not finished. I'll call you back. I'll call you back. I'm in a meeting. All right. So the number required to form a group, one person. Sorry about that, Sharon.
No, you're fine.
Who's eligible for a group? There is an employee group, okay, offered to both active and retired, but a debtor group, how many people need to be in the group? 100.
Oh.
So the
For an
debtor
employee group?
for 100. You see that?
Okay.
A trusted group, that can be a trusted group, not a social group. If it is a trustee, how many people they need to have? 2 or more. Employer, union together, whatever.
Okay.
If it is an association group, must have how many members?
100.
And the group must be exist for at least what?
For more
2
than
years.
2 years.
And have
Wait,
regular meeting annually.
so for example, say my job, if they're trying to get insurance for us, there has to be 100 members. Because
No,
that would, no.
no, because the job is just a job. If it was if debtor group job, if your job, everybody that's in there is the debtor things, no, that's no.
Oh,
They don't have, even if it is just one person, I mean not zero, I mean one. If it is just one of them, that's fine.
okay.
That word does not apply to that. So if it is
Okay.
a credit union group, must be issued to all eligible members. So if the eligible member is one, so that's fine. But if it is a debtor, that's people that owe money, no, you better be have 100 debtor with you. Sorry. All right. The group also must approve in receiving that. Have to be approved. Okay, I think we're almost done. Florida will require grace period, 31 days. See how they come here with put 31 days?
Mm-hmm.
And the group also have what? 2 years in contestability. They also have the entire contract, the representation versus warranty. A copy of the application must be attached to the policy and statement
Mm-hmm.
and representation and not the warranty. So they're not warranty anyway. So how do you explain not warranty? Insurability mean insurer reserve the right to require applicant to provide evidence of insurability. Okay, let me get this person. All right, so that's insurability. What misstatement of age? Again, same thing. They will adjust the premium of the benefits. Remember that. They're gonna fix it. They're gonna adjust it or fix it. Payment of benefits. The death benefit must be paid to the beneficiary design the policy. Certificate of insurance is to the insurer issue the individual certificate of insurance. Okay, so they don't own the policy.
Correct.
Conversion, 31 days to convert. We will talk about all that already. When you do the conversion, you can always convert to a whole life, to an individual whole life, not a term. When you live in the group, it will be a whole life without proof of insurability. Now, if they terminate the plan, the only people that can convert, the insured who can convert is the one that been in the plan for at least 5 years. If you're not in the plan for at least 5 years,
You have to
sorry, you're out. Unfortunately, you have no protection.
Okay.
Death pending conversion. If the insured die during the conversion period, an individual policy become effective, the claim is payable under the group plan. Woo-hoo. So if while I'm doing the conversion and the person die, okay, I didn't finish the conversion yet, so I still get my full death benefits. Conversion privileges, 31 days to convert. You can convert to any type of individual coverage except term.
Correct.
So meaning that if it's not term, they tripping. What do you mean except term? There's only two type of policy. Either you have a term or you have a whole life. Please give me a break. That's when you can convert to a universal life, variable life, whatever, as long as it's a whole life. And proof of insurability is not required. And the face amount will be the same as the group coverage. And the premium will be higher since you are now going to have individual policy. It's going to be based on your age. Woo-hoo, I wish you success. Oh, I love it. It's a beautiful learning. Okay. Now, coverage dependency. They'll cover the dependents and things like that. They'll cover your dependents and good stuff like that. So that's it. Any question on that?
Nope.
So if you don't have any question on that, how about if we just go ahead and stop